Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Clem Chambers. He is the CEO of Online Blockchain PLC. He is also the founder of an upcoming financial information website called enewfn.com. Welcome back, Clem.
Good to be back, Ivan. I've just got to say about that, and UFN is we have our site running free real time for the UK markets and free level two. And if you want to get that anywhere else, that'll cost you, five or $600 a year. So anybody that wants UK real time or level two, come on down. It's free.
Nice. When will it be open for like
It's
Canada
open
and the
now.
US?
Open now.
Really?
Yeah, all you got to do is promise that you're a private investor, not a professional, and it's all yours.
Wow. Okay, that's
You'll
pretty
see my
cool.
face on the front like this.
Nice. I recommend everyone to go check it out right now. What scenarios I wanted to get you on to talk about, everything that's happening in the markets, financial markets. My first question to you, Clem, is, what scenarios do you envision if the US faces a debt crisis or a potential default?
Oh, phew, I don't know. I'll be dead by then. It's just not going to happen. America can't default on its debt. What people don't realize, and nobody says, and everybody's saying, "Oh, the debt's too high. The debt's too high," is that only 30% of American debt is owed to non-Americans.
Hmm.
Now, if you think that a national debt is bad, imagine that you are a citizen of that country, and imagine that all that debt was owed to you. That would be like reverse taxation. You would be getting paid to hold your government's confetti. Yeah.
Right.
So if you're a member of that country's citizenship and you hold a treasury, for you, that's an asset. So it might be a liability for the government, but to you, it's an asset. And that government can always print off a few more sheets of confetti to pay you. Where you get into trouble is if, like Argentina, for example, you start borrowing money in other people's currencies, which you can't print, then you've got a problem because you can't repay it. And if you print your own confetti to buy their currency, to pay them back in their currency, your confetti collapses. And that's
Hmm.
the trouble that South America has. And a lot of developing countries, Africa, for example, nobody wants to borrow in their currency. Okay. They go, no, no, I don't want your whatever wombats, your Turkish liras. I
Right.
want to borrow. I want dollars. So if you want to borrow off us, you're going to have to borrow. You're going to have to repay in dollars, borrow in dollars, repay in dollars. Yeah, and then obviously your citizenship doesn't have, your national debt is in your local currency, and people that you owe money to is abroad, and you can't pay them out in your currency, so you're up the creek. But if you're America or Britain or Europe for that matter, most of it anyway, you could just print your own confetti and pay off your citizens. Now, your citizens were pretty raw about that because the money they put in was worth more, but then when they got paid back, and that's why governments do inflation. It's so they can get out of that. But that's not a default. You could say spiritually it's default, but it's not a default. There's no collapse in bonds. That's why Japan can have 240, whatever the level is, 240 debt to GDP, because nobody outside of Japan holds those that debt. It's all owed pretty much to the citizens of Japan. So there's no ramifications for that apart from if you want to get out from under it. Well, I mean, you just say, oh, by the way, the interest rate's really low. Tough luck. Oh, it's gone to null. Oh dear. What a pity. Oh,
Hmm.
you want to pay back your bonds at 0%? Yeah, okay. We just printed out some yen notes for you. There you go. Oh, where are you going to put them? Oh, you're going to put them back with us. Oh, here's a bond at paying 0.0001 interest. That's called financial repression. And that's how governments get around their big debts. And that's what you'll be seeing in America, probably already are seeing in America on and off.
But you can't do that forever, right, Clem?
Well, of course you can.
Hmm.
There's always been money and they've always been doing it. I mean, the direct lineage of the US dollar is the Roman denarius. They didn't stop printing money. They didn't stop making money. In fact, it didn't stop them doing that, even though it was gold and silver back in those days. They still did it.
Right.
It's still printing or in metal confetti. I mean, and then you go, oh yeah, problem. I owe too much. Oh, bring our gold back in again. We'll melt it all down, and we're still 10% of it, and we'll put 10% copper in and reissue it again. There you are. We'll pay back the bankers with that gold. Yay! I mean, it's not a new thing. governments with debts. That's why I mean, when I started in investing, and people say, "Oh, bonds," I'd go, "Bonds, yeah, I've read about bonds throughout history. Governments always renege on them, you know." Oh, really? Oh, they never do that now. Oh, you sure? No, they never do that now. I'm not so sure. Oh, not here. Oh, really? So, back in the day, the first diary writer was Samuel Pepys, and he made a load of money because he was working in the government. He was taking backhanders on shipbuilding, so he had quite a bit of cash. And he went, "Oh, the government has asked me to lend it to the king." So he lent all his money to the king, never got it back. So it's not a new thing.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video. You've said that we're in an elevated inflationary situation with QE coming, and interest rates dropping. How does that environment drive gold prices in real terms beyond just inflation hedging?
Well, you see, I'm a bit of a lone voice here because I haven't been predicting gold going through the roof because of the collapse of the dollar. I haven't been saying gold is going up because the debt is going up. I've been saying gold is going up because gold is the currency
Of
of
war.
international conflict. Yeah, gold is for war. And that drumbeat continues. And as that drumbeat continues, so the price will go up. Yes, it doesn't help to print confetti. But if you think about 2019, I mean, when that came out, there was a certain Nobel Prize winner in economics that said, "Oh, it's going to be deflation." Oh, and everyone was saying, "Oh, it's going to be deflation." I thought, what drugs are these people on? It's going to be inflation. They're going to print money.
Hmm.
It's like a mini war. They're going to print money and it'll be inflation. What are you talking about? So obviously, I was right about that. But what I wasn't right about, I went up to my ears in gold and silver. And what did it do? I think it fell. I
Right.
mean, the gold price is not directly linked to inflation. It might be over the long term, but not day to day, not week to week, not month to month, not year to year. So if they came out and they did a printathon, that they might actually do in the next few days, yeah, well, maybe it would spike gold in the modern environment, but it doesn't necessarily need to. It's one of those things which people don't want to generally invest in gold. Yeah,
Right.
but they're forced to because they go, "Oh, look what's happened. Look what's going to happen. Oh, no, I'll buy some." Yeah. So it's kind of clunky asset. And outside of fans of gold, like your watchers, most people, it wouldn't cross their minds to do it apart from when they see it on the news. Yeah. So it's one of those things that is like all commodities. Commodities reflect the purchasing power of the currency. Yeah, so when the purchasing power does go down, it still costs X amount of confetti or more X confetti to dig it out, and
Right.
therefore the price in confetti does go up. So yes, maybe you could say, oh, there's a very funny way of doing it actually, is you just value yourself in ounces of gold. You can say, well, I've added up all my value, all my stocks, all my houses, all my Lamborghinis, and they come out as so many ounces of gold. And my assets are going down in gold. Oh, I'm
Right.
getting poorer in gold. I'm getting richer in Bitcoin today. Oh, I'm so much richer in Bitcoin today, I can tell you. So, that's one way of measuring things. But I don't measure my wealth in terms of ounces of gold. I don't even measure my wealth in dollars or even in pounds like I used to. I maybe still do value myself in pounds, but actually these days I'm denominated in euros. So I think of myself in terms of how many euros I've got. Yeah. And actually, if you do that, it will change your point of view. If you start valuing everything in ounces of gold, then you'll find out you've got a lot poorer in gold over the last few months. If you've got a lot of gold, you'll be happy if you value yourself in dollars. But ultimately, in reality, you are valued in the fiat currency, the confetti of the country you live in. Yeah.
Hmm.
And those currencies are very stable, very, very stable. People think they aren't, but in comparison with, say, gold or any equity, they are very, very stable. And you can guarantee they're going to go down in value by a small percentage every year. And, that is the way that governments manage their finances. They borrow you see, the key to economics and government that you should grasp is governments do not tax you to the level of the budgets that they want to affect. So they don't go, oh, we've got to spend 10 and we're going to tax everybody 10. They go, how much can we tax those suckers? Oh, sorry, citizens.
Hmm.
Oh, 14. Okay, let's go. Let's get that 14. Now, let's spend it. Oh, it's not enough. Let's borrow some. Yeah. So they tax as much as they could possibly get away with, uh, hidden or otherwise, and then they borrow from the future. So that is the dynamic that drives them to have to devalue their debt because there's no limit to how much they would take off you in taxation. There's the limit that they can get away with, and there's no limit to how much they borrow. Yes, there is. There's the limit of how much they can borrow, and they know full well roughly where that is. And every now and again, obviously they take a little bit more than they should. Like you would, oh, I just do 10 and a half. I can do 10. I do 10 and three quarters. Oh, I need to get elected. I'll do 11.3. Yeah. And of course, that is the slippery slope that all democratic governments are on. Oh, which is nowhere near as steep as a slippery slope of non-democratic governments.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use, so that instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Absolutely. Now, what about the global conflict that everyone's been talking about for years and years between China and the United States? Do you see them actually going head to head in a physical, conflict, a military conflict over the next 5 to 10 years?
Well, there's artificial intelligence and then there's NS. And that's a new phrase that I'm coining, NS. And there's infinite supplies of NS, and NS is natural stupidity.
Oh yeah.
So one shouldn't underestimate the supply of NS. And of course, the most giant, grotesque natural stupidity is war, as we're seeing in Ukraine and Russia. Appalling. But we've seen that natural stupidity at work since the beginning of time.
Yeah.
And therefore it is a great threat. Now, I can't believe they're going to be that stupid, but also I know they can be. So it's like someone said to me. I was at a gold conference in Germany, the Gold Messe conference, and somebody said to me, "Oh, I don't like gold being 5,000. Oh, it's a bad sign." And I've said that in the past. I said it slightly differently. I said, "Oh, by the way, it's going to be pretty spicy if gold ever gets to 5,000." And bear that in mind. But really, as I've come to the conclusion, gold doesn't care about what you think about the price.
Right.
It's your job to prepare and provide for you and yours. And yeah, all right, if there is, World War IV about to kick off, there's nothing you can do about it. What you can do about it is have enough money to ameliorate it, as far as you're concerned. So, I think that yes, I mean, I thought 5,000 would put us in a really bad place, and we're so close already. So I think that there's quite a long way to march, and there's at least another year of increasing tension. And then when we get to 2027, when you can just see it on, if you look in the right places on the internet, that is when China is expected to want to have Taiwan back in the family, and why they've told the PLA to be ready, and they've done all those sort of speeches, and they're not hiding it. It's not secret information. They've said it. That
Yeah.
they've communicated it. What would happen then? Who knows? Absolutely, who knows? Obviously, it would be a very, very, very easy situation to completely mess up. I mean, and they might not do it. They might. I mean, it would be kind of silly for them, because all they need to do is march on for the next 20 years, and that will be a fait accompli, because China is rising so fast, and they've already. I mean, I'm sorry, this sounds awful, but I mean, what is it that America can make without China? What is it
Right.
that China can't make without America?
Right.
Yeah. So 20 years of that progress, because the thing that people don't realize, oh, places like China are catching up with us. Well, maybe they've caught up, but maybe let's say they haven't. But boy, are they catching up quick. But the point is, when they've caught up, they're not just going to stop, are they? They're going to keep going at the same speed. And the
Right.
speed it took them to catch up, they're going to maintain while, Europe and America wallows in slow growth. So they're going to blast past.
Right.
Well, once they blast past, then what? Then what have you got? Well, you've got them as the dominant superpower. So, that is a very stressful dynamic, a very demanding change in the way everything works. And of course, with gold being the ultimate strategic asset amongst countries, they're going to keep buying it, and that's going to keep pushing the price. So unless sanity breaks out, which it might, but certainly not for a few years, then that stress and that pressure is going to continue to push gold and silver prices, even if they cock up liquidity in America and we have a little bit of a stock market correction or crash for that matter. But I don't think that we're going to get one. But those things those things are short to medium term events. But this geopolitical stuff is very strategic, very long term, and is now going towards a sort of pinch point, and that's why gold is going as it's going. And then obviously silver catches up, and all the other anything that will be a strategic metal will be going up. And then you've got AI boiling the oceans anyway. So the commodities are going to be very much in fashion, the hard commodities. And
Mhm.
as I was saying at that show, I said there's going to be no such thing as commodities in a couple of years. They're going to be luxuries. Because if you think about commodities, the whole meaning of the word is generally available, cheap, and in bulk. Well, yeah, that might not be what they are. Well, look at copper. Maybe copper's not going to be will be needed in more bulk than it's made available in. So when
Right.
you've got demand in a commodity going up as percentages, but when you've got the demand for commodities going up as multiples, but you've got the supply going up in percentages, that mismatch is going to do some pretty startling things to the price.
Yeah, no, you absolutely nailed it. And I want to echo what you said about the natural stupidity because yeah, I totally agree with you on that point that you never know what could happen over the next 5, 10, 15 years just because of natural stupidity. Uh, so yeah, it's pretty crazy.
The other thing, Ivan, that I've come to the conclusion of, a lot of people make the mistake of being passive or defensive in these sort of situations.
Mm,
When the good times are rolling, you can be passive and you can be risk adverse and probably maybe a good idea. But when times are getting sticky, that's the time to get active. And that's the time to, in fact, increase your risk profile. Yeah, because,
yeah,
that's when you've got to get your skates on. So I don't think people should be defensive. I don't think they should go risk adverse. I think they should be very much active, very much engaged with what's coming up next, because that's where, if you can work out what's going to happen, the big returns are there to be made. And there's really no defending yourself against inflation, for example, unless you're active. There's really no way to defend yourself against all this aggro apart from being busy and getting on with stuff. And if you think about inflation, let's just say you're a rich bloke, you had $10 million in your account, and then suddenly there was hyperinflation, and that 10 million goes, and there you are, sat in your armchair. That's it. You got no money, and you got
right,
no job, and you got nothing. But if you had a job, you'd be being paid what you were being paid before. And rather than being paid $5,000 a month, $6,000 a month, you'd be being paid $600 million a month. And yeah, you'd have to run down to the bakery to buy your bread. And yeah, it wouldn't be a great situation to be in, but because you're active, you can adjust. Whereas if you're
right.
not active, you can't adjust. So being active is really, really important if you think things are going to get spicy, which, I am active, so I don't really have to worry about that. But if you are worried, it's good if you can get a move on.
Yeah, no, that's tremendous advice. Clem, I want to thank you so much for coming down and speaking to the whole community. Before you go, though, I really want them to connect with you. Where can they follow your work?
Well, I've been, took it on your show, and you've inspired me. I started a YouTube channel, which is
Oh, nice.
gone kaboom, and I've got 5,000 subscribers in, like, 4 weeks, and that's really great. And that's Clem Chambers Alpha, and I do a rant like this every couple of days about what's going on, and people seem to enjoy that. And I've got a Substack where I kind of, if you like a bit of textual work, is kind of the writing equivalent of that. And you can see me in Forbes. I write quite a lot for Forbes. So, and of course, on your show, and viewers should subscribe and like and comment and ring that bell, because you need all that so that YouTube elevates you, and people can see your great channel. Otherwise, if your viewers forget to do that, then you get buried by the algo in the cold, freezing outlands that is YouTube.
Well, no, I really appreciate that, Clem. Everyone watching this, highly recommend go follow Clem's new YouTube channel. I'll put it in the link in the description below. Go follow his Substack. Highly recommend it. And Clem, thank you so much for coming down and speaking to the community. As the markets develop, as always, love to have you back.
I'll see you then.
Talk
Bye
to you
now.
soon.